So that's a reality check we're very much looking forward to. Let's do one for tonight and come back to the reality we have tonight, which is that IR35 is a topic which is actually affecting most of us who are on this call this evening. And we've got three great presenters, and I've got a great colleague, David Lewis, who will introduce the presenters to you. So with that, that's me, Dallin Bassett, signing off and hoping you really enjoy this webinar. See you later.
Thanks, Dallin. Thank you very much for that introduction. Welcome to our audience and indeed to our speakers. IR35 is not something new. It's been around since 2000 when the Inland Revenue introduced the legislation, and the initial emphasis was very much on contractor compliance. As an individual, I run a company called PMI Consult Limited that specializes in banking consultancy, and we've been very much involved with utilizing a contractor model throughout our existence for the last 26 years. And therefore, for us, IR35 is a real issue. And it's not just for us, because the legislation was then amended so that it no longer really became just a contractor responsibility, but it now becomes an employer responsibility, especially for anybody who's running a large or a medium-sized organization. So we've got three experts. I'm not going to try and be the expert here, but that according to today's Times, 170,000 people could end up paying more tax as a result of these changes, which come into effect on April the 6th of this year, so which is only about 3 weeks away. And 60,000 small or medium and large organizations will be affected. 20,000 recruitment agencies. So if you're in the recruitment business, this is a big headache potentially for you. And they reckon that the government will raise an extra £3.1 billion of taxation through the introduction of these new regulations. That remains to be seen, of course, at a time when the government is eager for new revenues at the end of our pandemic. Maybe not the best time to introduce it, just as we all come out of a pandemic, but we've got some great speakers. So let me introduce the first of them. Our guest tonight is Dave Chaplin. David is the CEO and co-founder and founder of a contracting authority, contractor calculator, and a tax compliance firm, IR35 Shield. He describes himself as an IR35 addict, and that his expertise is called into the courts, both as a legal advisor and now he had turned it into a commercial enterprise. So, Dave, I would very much like to ask you if you would like to start the ball rolling. We'll then move on to Marie and come back to Chris. Three different speakers, and I'll introduce them each in turn. But over to you, Dave Chaplin. Would you like to start our event this evening?
Sure. Thank you, David. It's very kind of you, and thank you to the BCS for inviting me this evening to speak. I was very interested to see you've got Tom Gilb as a speaker on the 24th. I met Tom Gilb about 20 years ago when I was heavily involved in extreme programming, because I used to run teams of banks using extreme programming to build online banks. He's all about testing, and I'm still obsessed with testing 20 years later, and everything we do is very much test first, but that's the geeky bit. Let's talk about IR35. So everyone has a real treat actually going to meet Tom Gilb. So on to the geeky bit about IR35. My confession will last for about, of being an addict, will last for about 20 minutes. I've got 13 slides, and it's more of an introduction really, and to show you where lots of the financial impact will be. In terms of the impact, HMRC did say in their impact statement the other day that 180,000 people would potentially be inside IR35. So the times are a little bit off there. In terms of the money they raise, no one will ever know whether it's worked or not. We sent so many FOIs and had conversations with the OBR just to get inside of the metrics around how they would measure it. And the reality is they just don't have that level of granularity. So we're likely to see everybody claim success, but without any substance behind it. And we'll never really know that's the case. Right, so I've been involved in IR35 for 20 years. And like Tom, well, I haven't written as many books as Tom Gilb, but I've written 2 on IR35. There's one of them. I was an IT contractor myself for 7 years in the City of London, finished doing that in 2004. And I'd set up my first website in 1999 when the internet just started. Crikey, this makes me sound old. It was all about IR35 then. And that website just grew into this thing that I now have as Contractor Calculator so many years, 20 years later. So I've consulted with the Treasury on IR35 and with HMRC. I say consulted, I sort of turn up, say what I have to say, and then they just do whatever they want. That's how that works. I've been in the press. Many times I get quoted on matters to do with IR35. I have helped defend contractors in tax tribunals on IR35 matters. We won the last IT case that was successful in tribunal was Route Consulting. We won that and it was released in October 2019. It's going to upper tribunal later this year. I'm helping some presenters at the moment defend their IR35 status. So, and when I'm not helping other people defend status, I watch other tax tribunals where other people are helping other people defend status. So yeah, I'm rather obsessed with this whole topic, really. And it makes me a fabulous person to speak to if I'm at a party. Right, I'm going to talk about why the government are doing this, a bit of terminology, changes between the old and the new, the financial impact, assessments and the whole reasonable care thing, sharing the status determination statements and liability and what they're actually trying to do and what might really happen and how things are panning out, disputes, and then a bit of best practice, and then I'll just tell you a bit about what IR35 Shield does. Okay, so why are they doing this? The answer is to get more money. It's that simple. When you look at the amount of tax that's collected in the transaction when a salaried employee is hired, and you look at the amount of money at stake, including the taxes that employer pays, and you compare that slice of pie with how much they take when a contractor is hired, the slice of pie is less. And this is all about taking a larger piece of the pie, and the bit of the pie that's mainly missing, which is responsible for 82% of the perceived tax loss in that kind of transaction, is due to secondary class 1 national insurance contributions, commonly known as employers' NI. So that's what it's all about. They don't like the fact, well, I guess they don't mind, but everyone's moving to self-employment, gig working and everything. There's not so many employees, so the amount of money they're taking is less. There's a hole in the treasury bucket. So rather than maybe increase taxes elsewhere, which they can't do because they have this triple lock, they have to try and tell everybody, really, you're an employee, so give us some more money. That's what's going on. They tried this 20 years ago. It failed terribly. No one really listened. The estimates that the government have that 1/3 of the contractors should be paying taxes under IR35 I think is probably about right. If you look at the most recent impact statement, they think that's more like 42% of the ones we have now. They said that 90% of contractors that should have been paying the taxes weren't. I think that figure's far too low. I would say it's probably closer to all of them. I don't know many people who have paid taxes being inside IR35. So we find ourselves in this situation where no one's ever been paying that extra tax, which is mainly employers' NI. It's never been priced in. I guess you could say everybody in the market has been complicit in this, but someone now has to pick up this new bill. Bit of terminology just to set the scene before I go into a little bit more technical stuff. We talk about IR35, but there's no such thing. It's called the intermediaries legislation that was introduced in 2000. And the reason it's called IR35 is it was Inland Revenue, note number 35, that was released in February 1999. And then it's Chapter 8 of the Finance Act. The new bit is a brand new chapter of the Finance Act. They haven't scribbled out the old one or changed the old one particularly, other than to say it's only for small companies. There's a brand new chapter, brand new legislation, and they are different. And the new one's been rebranded as off payroll. but everyone calls it IR35 still and refers to both the old and the new as IR35, which can be confusing. HMRC do it themselves, and when you read their guidance, you can see how some of it's mixed up, and that doesn't really help everybody. So we should either be referring to Chapter 8, Chapter 10, or IR35 or off payroll. Now, it's all about, as I'm sure most of the audience know, about trying to see whether somebody is a deemed employee. This is somebody who, if it wasn't for the interposition of a limited company and you examined the relationship and how they work, not what they do, but how they work, that they would be considered an employee when you look at the status factors and you imply the rules around employment status. And those rules are in the case law. It's common law. It's everything that's been made in the decisions that have come out the courts. There's nothing in statute that says what an employee is, unlike worker status, which is in employee status, that is in statute. And that was what was central to the whole Uber case, that there was the backdrop of the statute. Whereas for IR35 and in tax, you just have you're either self-employed or you're employed. There's no worker status. So don't worry too much about the Uber case. In a way, I think that might help us. So we talk about, is someone caught by this legislation? We might want to ask what their IR35 status is. And we either say they're inside IR35, or we might say it applies, they're within, they're caught by, failed. Don't see failed used much these days. It's all, you're either inside IR35, in which case pay your money, or you're outside IR35, carry on as you have done for the last 20 years. So the pain point is where someone is found inside IR35 and under the new Chapter 8 of payroll legislation. That's where it's going to be a problem, because there are considerable differences between the old and the new. First one is, who does the assessment? Under the old system, the contractor did an assessment, didn't they? Yes, every year for 20 years. Everyone's been doing those. Under the new one, Chapter 10, the client does the assessments. Now, oddly, under the old system, makes sense, the contractor would do their work and then they would do an assessment after the events have taken place and they know what happens, they knew what the contract says, they knew what the working arrangements were, and they knew what happened during the currency of that contract, and then they could judge, well, was I inside or outside? Now, under the new legislation, we all have to go and find some plutonium and a DeLorean and a bolt of lightning, and guess what's going to happen over the next 12 months to see whether someone's inside or outside IR35. Doesn't sound actually as bad as that, because most of the time you can probably tell by looking at the actual contract itself, assuming it aligns with the true arrangement, and working it out that way. There are nuances based around whether someone's in business on their own account, but I won't go into that now. Right, tax liability under the old system, all these contractors paying tons of extra tax for 20 years, weren't they? Under the new one, the fee payer has to pay the money. So that will either be the client or an agency if there's an agency in the chain. But here's the big one. Under the old system, the contractor was responsible for paying both sets of national insurance contributions. So the amount of money they were paid, you had to reverse out the employer's NI, which gave you, which left you with a salary, employment income, as everyone would know. If someone's paid 50K a year or it's advertised as 50K a year, that is employment income. So from that, you pay your income tax and your NICs, your employees' NICs. Now, under the new system, the amount of money that is paid to the contractor is called the deemed direct payment. I always get it the wrong way around. It might be direct deemed payment. But that amount of money itself that's paid to the contractor is employment income, which means the fee payer needs to pay the employer's NI on top. You can't take employer's NI out of employment income, because that is a breach of the Social Security and Contributions Benefit Act, Schedule 1(3)(a). So you can't do that. So this is going to cause everybody a problem. I've got 3 pies here, and the 2 pies on the left are the old system, and the pie on the right is the new system. So under the old system, the contractor would be outside IR35 and they would be paying taxes probably a small salary and some dividends would be the typical way it's done. So they're paid corporation tax, bit of possibly a tax on some of their salary, and then divs. If they're inside IR35, we're reversing out two lots of employers NICs, employers and employees, and paying income tax. So they're paying a lot more tax. You're paying you've got a double NICs charge. It's why it's so unfair. It's why so many people went off to all these horrendous loan schemes and things to try and circumvent this bad idea, as we all know. Under the new system, assuming the contract rate does not change and it's not renegotiated, that amount of money, in this example, it's £400 a day, must be treated as employment income. And because of that, there's this extra charge, which is the employer's NI and the apprenticeship levy. That has to be paid on top. And that's this green piece of pie. And no one's got that money. It's just magically appeared from somewhere, and someone needs to pay that. Now, there's two ways of doing that. I don't have that other slide. Two ways of doing that. One, well, the agency can't pay it because it's more than the margin that they charge for their client. So they haven't got the money. The contractor, well, you can't take it from the contractor because that would be illegal, or should I say unlawful. So if the client's not going to pay this extra money, which in some cases they do, but it's rare, then there needs to be a contract renegotiation. Now, we've seen this happen badly in some cases where clients have said, you have to pay this employer's NI and we're going to take it off your £400 a day. Well, that's just asking for trouble because that's an unlawful deduction. They need to be saying, we can't afford to pay you £400 a day anymore. So the new rate that we will pay you, and we're prepared to pay you, is £354 a day, because that then allows for that extra thing. They need to be very, very careful about these renegotiations on these rates. Now, if the so the client's going to try and renegotiate the rate down, like a PAYE rate, to £354 a day, so they're still paying 400. The contractor's going to want an extra £30 a day because they're going to be paying some extra tax as well. So you've got this big disparity between what each other wants. So in some cases, contractors just take a pay cut. In other cases, the clients are having to pay more money. Where it becomes a real problem is when expenses get involved. And that's where a contractor might be leaving home on, well, it's not really in COVID now, is it? But leaving home on a Monday, traveling down to a site, staying there 4 nights a week until Friday, then coming home. They could incur, particularly the oil riggers, they could incur like £20,000 a year in extra in expenses. Now, in the olden days, they can pay that tax-free, claim that tax-free, but under the new regime, they can't. So they will need to pay that out of post-tax money. Well, there's no way they're going to do that. So they will be looking to increase their rate by around about 35 or 40% to take account of those extra expenses. So if you have someone on 400 a day, they may well be asking for 560 a day and you only want to pay them 354. So there's a major problem there if you need to have access to a mobile workforce. Right, assessments. Everyone's supposed to be assessed. Well, an assessment is supposed to be done after April the 6th. There's no legal requirement to do them before April the 6th, but most firms are. There are some firms that aren't going anywhere near this. A proper assessment for IR35 status must look at the contract, must look at the working conditions, and it should ask some of the contractor's details as well. And of course, you want to have that collaboration with the contractor and check that all of the information going into the assessment is accurate and correct. Otherwise, you could be accused of not adhering to reasonable care. You can actually make mistakes and still adhere to reasonable care. That is okay. But I mean, I wouldn't recommend it, but you can do. So we're looking to gather that information to do the assessment. Now, the legislation itself, referring to reasonable care, says reasonable care must be used when the decision is made on the determination. It's to do with the conclusion made coming to the determination. Sometimes you'll see this in in the guidance saying reasonable care must be taken for everything you do now to do with IR35. Actually, the legislation doesn't say that. You could make a complete hash of it, provided at the point at which you make the determination, you have taken reasonable care. Now, to adhere to reasonable care, use people that you know, are proven, know what they're talking about, have experience in this field, make sure you have a good process in place, don't do anything blankety, and you probably want to have a good disputes process in place, although that's a different part of the legislation, because it'll provide you with a good feedback mechanism to ensuring that moving forward you're even more accurate. So yeah, three types of information that you need to collect. Now, the contractor's details in most cases won't really make that much difference. Now, they should do, and they could do in status determinations, if that particular contractor is in business on their own account. It's at that point that maybe, I mean, I'm being vague, but maybe it could override the rest of the assessment or the conclusion that's been drawn to say that, well, actually that person's in business on their own account. So therefore the conclusions made on personal service, mutuality of obligation and control, we're going to override those. If you want to read an example of how that's done, read the Atoll House decision, the upper tier decision, Kay Adams case that came out recently, same day as Uber, actually, that one came out. And you'll see how the judges formed that conclusion. Kay Adams had lots of concurrent work. She had a history of lots of concurrent clients, very different to contractors that have just done something 6 months here, 6 months, 6 months, a serial contractor. I don't think there's enough case law in place at the moment necessarily to mount a very strong defense on a in business on own account basis. So therefore, I think the main thing will, as always, will be around control. Right. So what are these SDSs, these statements all about, and how does the tax move around? The whole point of these is to produce a behavioral effect. And that behavioral effect is two things. One, give the contractors a chance so that if they've been told they're inside, then they should be able to dispute that, and give them a chance of trying to get fair tax treatment. That's one reason. And we'll come on to those disputes. The second reason is to make sure everyone pays up and pays the tax correctly. So when the status determination statement is passed down the chain to the agency, to another agency maybe, then the person that's holding that status determination statement holds the tax risk. So if a client has adhered to reasonable care and passed an SDS to an agency, the agency is actually liable in the longer term for the tax if the determination was incorrect, which is grossly unfair, but it is the way it is. If the client has used reasonable care, I think it's highly unlikely that they might have got it wrong. I think it's highly unlikely that HMRC would even bother to take them to tribunal. I can't see how HMRC would win a case against all of the parties who are all standing up in court telling the same story, and the contracts tell the same story. I don't think they would bother. I think they've got other fish to fry, lower fruit to pick, and all our various other metaphors to go after. So I think provided you do things accurately, you should be okay. I don't see the risk as being particularly massive on this, but I say that because I defend status all day long. Right. So it's about producing that behavioral effect. Interestingly, a status determination statement that says that if someone is outside IR35 does not have to be passed down the chain. It's only the ones that are inside that have to be. So whilst some think that all of the status determination statements need to be given out, they don't necessarily, but we are actually seeing that happen. A client could decide to do no status determination statements whatsoever, just say to the agency, pay them all gross, please. And it's just entirely up to them what happens. You know, they may decide to take the risk. They might decide to just get a barrister's opinion on the way they operate and decide that that's enough for them. That might work. For typical contractors though, 3, 6 months, a year, SDS is the way everyone's doing it, passed down the chain, just a robust assessment, really. That's what's happening. Right, the status disagreement process. Well, the status disagreement process, a bit like my late grandma, had no teeth. It's rather pointless, but because it's essentially clients marking their own homework and they're unlikely to actually decide to do something different. Now, in the original proposals for the legislation, HMRC did say that they would give the opportunity for contractors to dispute to a tax tribunal an individual status, which they didn't think was correct. That just disappeared. It didn't happen. They've come up with this, which is clients have to take into account any disputes contractors make. So here's the general idea. The client produces an SDS. A worker who's got one that says outside IR35 is hardly going to dispute that. So let's assume it's inside, and then they then say to the clients, I disagree with that, and here's some reasons why. Representations, they're called. And then the client must respond in 45 days. And then if they say, well, no, sorry, we disagree, and here's our reasons why, that's pretty much the end of it. Or they might decide to change their mind. Oddly, a contractor can raise more than one dispute and can keep making disputes all the way through the contract. However, what we are seeing is that most agencies and clients will do all of this before the contractor starts. Otherwise, they end up with a massive mess afterwards if there's still disputes going on. So, and I would say to contractors as well, make sure you know what the status is and you've done your dispute before you start the work, because it's just not practical. No one's going to change their mind. It's just, people aren't going to be paid via PSCs on an inside basis. Not after Uber. I can't see that happening. It'll be agency payroll or umbrella or fixed term contract. So the reality is with these, they're worth doing because if a client gets lots of these, they might get the message actually that their process isn't very good, and maybe they need to improve on their process because they're getting the answer wrong a lot of the time. So you certainly should dispute if you can. Although don't expect much to happen. It will typically be a case of, well, do you want the job or not? But if clients start seeing that they're losing out on hiring contractors because they're sending out too many inside determinations, then they might think that maybe there's something wrong with their process. It could be that everybody is inside IR35 in their firm. If that is the case, I'm not sure why they're even bothering with this. They should just hire everyone on payroll anyway and just make a company decision. Lots of the banks have done that just because they don't want to take the risk. So yeah, there's not much to this disagreement process. I don't think we'll be seeing disagreements after April. I think it would be a case that something's advertised as either inside or outside. We'll just see transitional disputes over April. Right. Last slide. Right, blanket bans. Don't know what you're talking about. Not seen any of those. Right, lots of those going on everywhere. The Treasury line is, what did Jesse Norman say to me? I've seen no evidence of blanket bans, he said. So I said, here you go, here's a list. And he still maintains it. But a firm can make a decision that it doesn't want to hire contractors using PSCs. It's a commercial decision for them. They can do that if they want to. It's the one of least risk. It's just going to cost them lots of money to do so because they won't be able to attract contractors because they'll be at the back of the queue. So it's just a blanket ban on PSCs. They can't do blanket determinations across the whole workforce. That's not reasonable care. And if they did that, then that's just going to turn into a massive mess because they would get disputes saying, You could dispute an SDS and say reasonable care has not been met, and therefore, Mr. Agency, you have to pay me gross because you're not the fee payer. And that is just asking for a mess. So if you're an agency, you certainly don't want clients to be doing that at all. That puts you in a really tricky situation. Umbrellas, absolutely fine. Not for everyone. Some people want to be on payroll. There's benefits. I'm sure Chris will talk about that later. So just decide what you want to do. There should be, I don't want to steal your thunder, Chris, key information documents and illustrations and things, but Chris will talk about those later. Just what rates, just watch out for any mis-selling on rates. Make sure you know if you're inside IR35, what that rate actually does mean to you in your pocket and what the deductions are going to be. Again, key information document on that. Insurance, you can't, this is a question that we've had recently. And contractors say, well, I'm with a client, I'm outside at the moment, I'm outside IR35 or I'm operating outside IR35. The client has said I'm inside IR35. Can I get some insurance to cover me for the previous stuff? Well, the answer is maybe. If you were inside IR35, you can't buy an insurance policy and insure yourself against deliberate non-payment of tax. I mean, it'd be great, wouldn't it, if we could all do that? But that doesn't work. If you haven't paid your tax, that's tax evasion, and HMRC can go back 20 years. So if you've been told you were inside and someone's given you an opinion that you were inside IR35 and you've done nothing about that, you haven't taken a third-party opinion and come to another opinion in yourself that you're outside, you are in the zone of willfulness, and HMRC can chase you for 20 years. So if you are inside IR35, pay your tax is what you should be doing on that. Don't think you can just buy an insurance policy and an underwriter will pay your tax bill. It doesn't work like that. Right, appeals, which is the status disputes, try to get a feel as to whether the client will even engage with them. If you are going to do them, make sure you know what you're doing and try to structure them a little bit like how they're judged in court. So come up with your facts, come up with the law, apply the law to the facts to come to a decision and make your appeal around that basis, rather than saying things like, yes, but I've got a laptop and I bring in a pencil. I mean, you know, there's lots of frivolous attempts by contractors who don't really understand what they're talking about. So make sure you know what you're talking about. Don't necessarily expect clients to listen, and try and ascertain up front, because a good dispute would probably cost you 500 quid to get a lawyer to do it for you. So just do them properly, but don't expect too much to happen. Number 6, and is the most important one, make sure you know what you're talking about, really. Read books about the topic so that you are well informed. And number 7, I can't believe I'm saying this on the 10th of March, act now, don't leave it to the last minute. And that's me. Right, IR35 Shield is a product we've been building now for, well, 10 years when we first built our first status algorithm. This one's been going for 4 years. We've got products for contractors, helps you do determinations. We've got products for businesses to help them do determinations, manages workflow, risk, bells and whistles and everything. And our thing is we want everyone to have fair tax treatment. And if you're inside, you pay your tax. And if you're outside, you should be able to engage on an outside basis. That's what we are all about. And that's it from me. That's my slides.
Thank you, David. Can I draw you to a conclusion? Yeah. Brilliant. Thank you very much. I'd rather let you overrun. I apologize. Therefore, I'll keep Q&A till the end, if I may, and move straight on to introduce Marie, who we need to unmute, if I may. Thank you very much. Marie is a partner in Urbach. Hacker Young, which is, to give it its full title, has been for a long time, but she's also a specialist in the recruitment side of the business. So she has a special profile for the recruitment industry. Marie, I know you've made a small presentation. Can I hand the floor to you and ask you if you would care to go through your presentation, please.
Yeah, thanks very much, David. Let me just try and share my screen.
Nice to see you again.
Right, great. Can you all see that? Thank you for that lovely introduction, David. And thanks.
There we are, that's perfect. Yep.
And thanks very much for inviting me on to this webinar. I wouldn't say I'm an IR35 addict, and I certainly haven't written any books on IR35, but the new off-payroll legislation has really rocked the recruitment industry, as you can imagine, and I've literally been living and breathing off-payroll legislation for the last couple of years, especially considering they delayed the original implementation of it last year as well, so it's been an ongoing headache, I think, for a lot of recruitment companies. For the last sort of 12 months, as well as all the COVID and things that are going on as well. So it's all been fun and games. My presentation, I'm going to try, obviously, because we don't want to overlap in terms of talking about the changes. So I'm going to cover some of the finer points in the off-payroll legislation. So I'm going to talk about the labour supply chains. So what sort of supply chains you're going to be in and when they get a little bit more complicated. I'm going to cover the employment status assessment, so what is behind the criteria and how do you know whether you're behaving as an employee or not. And then what happens if you're inside the scope of IR35, so what are your options as a contractor. I'm also going to cover some legislation for recruitment companies, which is called the Agency Worker Regulations, and the key information document that Dave referred to earlier. And lastly, but not least, I'm going to cover whether you still need your personal service company if you fall inside the scope of IR35. So as an accountant, this is the sort of stuff that we sort of been supporting some of the contractors and recruitment companies with. So just to clarify, when do the changes take effect? So the new rules that come into play are based on payments made for services provided on or after the 6th of April 2021. So if you're receiving a payment that is for services that you provided before that date and you receive it, say, the end of April, then the new rules don't apply to that payment. So just to clarify that. And who's affected? Now, most of you would have seen the rules around which clients are caught inside these new off-payroll legislation rules. So we're talking the public sector, it came in 2017. We're now doing the private sector from April 2021, and it covers medium to large companies. And the criteria, as stated on this slide, is the turnover of £10.2 million, balance sheet of 5.1, or more than 50 employees. Now it's up to the client to know this criteria and know if they're being caught by these rules. And just to let you know that a client will cease to be medium or large if they no longer meet the above criteria for at least two consecutive financial years. One thing that doesn't come up or isn't as clear is group rules. So you may act for, as a contractor, you may act for a small client, but they're actually part of a large group. And that's where this criteria comes in as well. To get even more complicated, this is where the supply chain comes in. So I've started off here in terms of a basic supply chain and where the responsibilities lie. So if you've got a UK client and you have a personal service company and a UK contractor, and that's a very basic supply chain. The UK client is the one responsible for doing the status determination, deciding whether the contractor is inside or outside the scope of IR35. And the client, as it's the closest party to the personal service company, so the intermediary, they are responsible for paying and deducting the taxes if inside the scope of IR35. So they're classified as the fee payer. Now, if we go on to slightly more complicated supply chains, you have things like a recruitment company that may be in between the client and the contractor. In that case, I've highlighted in green, the client is still responsible for doing the status determination statements. And in orange, you've got the recruitment company who becomes the fee payer because they're the closest party to the personal service company. And they need to act on the status determination statements that have been passed down the chain from the client. You then can be slightly more complicated in terms of the client may fully outsource or contract out their services. So for example, if you had, let's keep it simple, a cleaning company that comes in and services your offices. They're actually providing a service, not the labour. So they actually become the client that the contractor is working for, not the actual client that's being provided those services. So then therefore they are responsible for assessing whether the contract is inside or outside the scope of IR35. We then move on to overseas clients. So if you have a client that is wholly overseas, has no UK presence whatsoever, then we almost refer back to the old rules that Dave was referring to, where it's up to the personal service company, providing they're also in the UK, to make the status determination to see whether they're behaving as an employee or not, and to deduct the relevant taxes. Then we get a little bit more complicated, which has all been fun and games when I've been putting these slides together. You may have an overseas party within the supply chain. And if that's the case, depending on, assuming either party outside that overseas person is in the UK, it's up to the client to then actually pass down and over to the personal service company the status determination statement. In scenario 4 there, because it's quite a short chain, the client remains as the party that makes the assessment, and also the fee payer as well, and they need to deduct the right taxes and national insurance. Now, if you have scenario 5 here, you've got an overseas personal service company, an overseas contractor, and they're acting overseas. Actually, to be fair, it does say UK clients, so it's probably a little bit incorrect there. If this contractor is actually overseas and they're subject to taxes in that country, then IR35, the off-payroll legislation, is not applicable at all here, because they're in a whole nother tax jurisdiction. Scenario 6, we've got an overseas contractor that works in the UK. Again, it's similar supply chain as it was further on. So in the previous slide, the UK client makes the assessment, and the UK recruitment company, if there is a recruitment company in the chain, becomes the fee payer. And finally, if you've got an overseas client and an overseas contractor, but a UK, I don't even know how this scenario would ever happen, to be honest, but it then reverts back to the old rules there. So I think we'll be sharing copies of these slides. So if you want to digest them in a little bit more detail, then I'll be happy to send a copy, or if the guys will send it after this webinar. I'm not sure what's happening with that. So going back to the employment status, what sits behind the test? There's generally 4 areas. There's control, so what is being done, how is it being done, and when is it being done? You have substitution, so do you have a right to send a substitute in to do the work that you're being carried out, the contractor is carrying out? Mutuality of obligation, so does the client have to provide work, and does the contractor have to accept the work that's being provided? And risk and reward, so who bears the risk and reward of the task being completed? So does the contractor have to make sure, correct the work that they've done if they do it incorrectly, or does the client have to do that? And these all sit behind the General Employment Status Determination test. So HMRC have actually got a tool called the CESS tool, which I'm sure a lot of you have heard about. There's questions about whether it's any good or not. I think we've all got our own opinions about that. But this is what sits behind that tool. And a couple of other points to think about in terms of whether you're behaving as an employee or not is integration. So how integrated is a contract in the client's organisation? Do they have their own email address? Are they invited to the Christmas party? Things like that. What does the contract actually say? And does it reflect the relationship? And whether there's any termination rights within the contract. So there's a lot that sits behind this, but those are generally what's looked at when you're considering the status of a contractor. So options for a contractor. So should a contractor fall inside the scope of IR35, so considered a deemed employee, they tend to have 3 options. The first option, these aren't in any order either. The first option on the slide is an umbrella company, which I think Chris is going to talk about next after me. So I won't go into too much detail about umbrella companies. Another option is off payroll, it's called. So that's where you retain your personal service company, and I'll explain that in more detail. And the third option is PAYE, so becoming a PAYE employee effectively with either a recruitment company or the actual client you're working with. And I'll explain that in a little bit more detail. So we have an off-payroll worker. So this is, again, I've done a basic supply chain at the top. So you'd have the client, your personal service company, and there might be a recruitment company there as well, and then the contractor. Now, because you're inside the scope of IR35, the fee payer, so that could be the client or that could be a recruitment company, depends who's closest to you in the chain, has to deduct tax and national insurance from the net invoice amount. They then pay over the net amount plus the original VAT that's due. Because the contractor still has their personal service company, they don't get any employee rights or benefits. So there's no holiday pay, no pension or anything like that. As the fee payer, you cannot claim employers' national insurance allowance on the money, on the national insurance that's being paid. The apprenticeship levy does apply, so that's only if you've got a gross payroll wage of £3 million. Pension holiday pay is not relevant because the contract is off payroll, it's not an employee. Things like student loan deductions and attachments of earnings or anything else are just not relevant because, again, they're not an employee. The fee payer will have to provide the worker a new starter checklist, and it will be run through their payroll. They tend to use a basic rate tax code, which may, depend on what tax bracket the contractor is, that may result in them underpaying tax and having to look at that in their year-end accounts. And then the fee payer has to mark the contractor as an off-payroll worker when they submit their reports to HMRC every month, and their payroll software does need to be updated to reflect this. Most payroll software has been updated already. I'll be very surprised if you haven't had that update if you are a fee payer. So a temporary worker, this is being employed effectively directly by either the client or the recruitment company. So there's no longer a personal service company in the contractual chain. So with being a worker, you have, deduct tax and national insurance from your gross pay as normal. VAT is not relevant because there's no personal service company. The fee payer can claim the employer's national insurance allowance because they're an employee. You have the apprenticeship levy does apply, and then the fee payer then is required to provide a pension, and they should not be discouraging contractors to opt out. So it's the contractor's choice whether they opt out of the pension scheme or not. Things like student loans and other deductions are also relevant because they're behaving as an employee, and the contractor gets holiday pay as well because they're classed as an employee. Expenses. So this is quite a big thing for contractors, and if you fall inside the scope of IR35, as Dave's mentioned briefly as well, is your expenses tend to change. There used to be, well, there is a deduction at the moment. It's a 5% deduction allowance that personal service companies were allowed to offset against their income, and that deduction allowance was because the personal service company was making the assessments, weren't they? But now, obviously, that's been administrated by the clients. That 5% deduction is no longer relevant anymore. We also, it depends on the nature of the employment contract as well, to whether you can deduct any other expenses from your pay. But I think generally, in nature, most expenses that you can't, things like travel and things like that are generally outside the scope of what you're doing as you're considered as an employee if you're inside the scope of IR35. Agency worker regulations. So this is bespoke for recruitment companies, and if you do become an employee of a recruitment company, then you get day one rights. So with the client, you're allowed access to collective facilities, and you should be provided information relating to vacancies that the client has. Once you've been 12 weeks in the same job, so it doesn't mean working 12 weeks full time, you could be working 3 hours a week, but once you've been in 12 consecutive weeks in the same job, then you do get access to things like making sure that your key elements of your pay is equivalent to someone who's fully employed within the business. And the same with your holiday as well, that your annual leave, those are the two big things really, that your annual leave is equivalent to a full-time employee and an employee of the business directly. And the key information document, again, this is relating to agencies. And if a contractor is to engage with a recruitment company, then before they sign any terms and conditions with the recruitment company, they should be provided with a key information document. And this rule came into effect from the 6th of April 2020. I'll be honest, considering where the world was in April 2020, I imagine this rule may have gone under the radar a little bit with some recruitment companies. But the purpose of the legislation is to make it fully transparent with the contractor and the recruitment company in terms of pay, really. So who's paying the contractor, what's the rate of pay, what are all the deductions, and it should be very, very clear and laid out. And it also, if the assignment is engaging with an umbrella company or with the recruitment company directly, you should be able to see the different options of what the deductions are. I think, last but not least, so I've done a kind of sort of, I don't know what you call this, a question flow for whether you still need your personal service company, should you be inside the scope of IR35. So to start off with, if you're a contractor, you've got your own personal service company and you've been given an assignment that's inside the scope of IR35, the first question is, do you have any other assignments outside the scope of IR35? If you do, then the general recommendation is you may want to keep your personal service company. If you don't, and you don't have any plans for any future engagements outside the scope of IR35, then you may look to wind up your personal service company to save some costs, because you no longer need it. There's no point having it. And then to look into wind it up, I recommend you get in touch with your accountant, because there's lots of different ways to wind up a company and you want to be as tax efficient as possible. The different ways depends on how much reserves you've got in the company. So if you have reserves of less than £25,000, then you can do a statutory strike-off process. But if you have more than £25,000 in the company, then there's ways that you may be able to drip feed the funds out through dividends and pension contributions to try and get below that level, so you don't have to formally appoint a liquidator. But again, I really recommend getting some professional advice on this, because you don't want to end up going down the wrong route and not making most of your tax allowances. And that's it from me. So I'm going to stop sharing and pass back to David.
Brilliant. Thanks, Marie. Thanks for racing through. And my thanks to Chris too for your patience. Let me introduce you now to Chris Fahey, who works for a company called Azure. Chris has been in the umbrella company business, if I can call it that, for about 17 years, worked for several different employers in that period, and therefore can consider himself an expert on umbrella companies. Chris, can I hand over to you and ask you to give us a different perspective on this problem?
Yeah, thanks, David. I am coming to you from sunny Glasgow, so I hope David couldn't get me any subtitles on the screen, so I hope you guys can all understand the strong Scottish accent. When David asked me So when David asked me to come on and have a chat with you guys, I didn't want this to be a sales pitch about umbrella companies. I wanted it to be something educational and something important to you guys that you could take something away from it. So as we know, the majority of the roles are going to be inside IR35 come 6th of April, and your options are going to be umbrella or agency PAYE more often than not. So there's a bit of a perception in the marketplace around umbrella companies that we're all bad guys. I'm hoping after today you realise there are some good guys in the marketplace. I'm going to explain everything, talk about transparency, and any questions, then happy to help you all out. So that's the agenda for today, so I'll just jump right in. So as David mentioned, I'm the sales director for Azure Global. Been in the payroll industry for 17 years. Worked for some of the biggest umbrella companies in the industry, and through that time there's been numerous legislation changes. The one that's always been on the radar has been IR35. So hopefully a bit of an expert on this side of things. I joined Azure Global over a year ago as the sales director. We started January 2020 as a UK payroll company, We managed to win a contract to payroll, employ and insure wind farm contractors in America. So we've now evolved into an international payroll company. So we now provide global HR and payroll solutions in the UK, Europe, Middle East and North America. So as I said, I'm looking for this to be helpful for you guys, and I wanted to use the experience that I've had and the contacts that I've had over the last 17 years. So what I did was I phoned up 12 of the biggest IT agencies in the UK where I know a few directors and senior people within those companies. And I asked them about IR35 and what's actually happening at the coalface. So this is an analysis of the feedback that I got from these directors and senior people within the agencies. So they're telling me that 90% of the end client being the agency's client, are refusing to increase the rates if the roles are inside IR35, which is quite alarming to me. 85% of contractors are going down the umbrella route. Around 15% are going down the agency PAYE route. And around 20% of contractors are deciding to leave the roles that they're in. They're deciding to maybe go permanent or overseas, and we'll go into that in a bit more detail later on. But Dave touched on this earlier on, and I think this is the crux of the matter, is that the umbrella companies make their money from the margin or the fee that the contractors give us on a weekly basis. The agencies make their money from the margin, and the only way that we can increase the rates is by the end client potentially getting these rates increased. So this was a comment from a director of one of the biggest IT agencies saying our margins are being squeezed, so we can't increase the contractors' rates unless our clients increase the charge rate. So there's definitely a conversation, even though it's saying 90% of the end clients are refusing to increase the rates. As Dave said earlier on, it becomes a renegotiation. So it's always, once it's explained the employment payments that come in when it comes to umbrella and PAYE, then it's up to you guys to try and renegotiate these rates and try and get them higher. It's always good to ask the question. So the benefits of umbrella versus limited company. Nobody's going to sugarcoat this. The difference, limited company was great. If you were outside IR35, is usually you paid yourself national minimum wage, paid yourself dividends, offset expenses, and roughly took home about 80% take home pay. You were a director and a shareholder of your own company, and there was no employment costs within there. When you come through an umbrella company or you go agency PAYE, there's now employment costs involved. But there are some benefits of going down the umbrella route. So as I said, when you go down the route of being through an umbrella company, you get a contract of employment, which is completely different from having your own limited company. So when you get a contract of employment, you've got the same employment rights as a permanent employee. You haven't got the administration that you had as a limited company contractor, so you don't have to produce invoices. We do that on your behalf. So there's invoices produced between the umbrella company and the agency, so it takes away that admin from your point of view. You don't have to do end of year accounts. As I said, we're the employer. The umbrella company is the employer, so we pay your tax as your employer as you're going along. And because you don't have to produce the end of year accounts, you don't have the cost of an accountant. So there's a saving to be made there. And as I said, you guys, you get employment rights if you come through an umbrella company, which you wouldn't get through your own limited company. When you're a limited company contractor, you have to pay out for insurances. When you come through an umbrella company, you get that contract of employment, but as part of that, you also, when your weekly margin, that covers your insurances as well. So Azure, for example, we give every contractor £20 million worth of insurances. So it's £10 million employer's liability, £5 million public liability, £5 million professional indemnity. So if that was your own limited company, that would be an additional cost that you would have to pay on a yearly basis that you don't have to pay through an umbrella company. Also, something that contractors are not aware of, because you've got this contract of employment through an umbrella company, if you work in a contract role for 12 months, and then you go and work in another contract role for 6 months, and then another one for 18 months, and another one for 6 months, if you use the same umbrella company for all those roles, it's seen as one employer, and that's seen as continuous employment, which is good for your credit rating, and it's good for contractors getting loans, and probably more importantly, mortgages. So high street banks, they don't understand the contractor marketplace, and they're not really helpful when it comes to contractors getting mortgages. So coming through an umbrella company and having that continuous employment is good for you to get mortgages. So part of our group, we've realised this is an opportunity to help the contractors. So we've set up a business called Red Arc Financial, and that specialises in contractors getting mortgages. So something to bear in mind. Umbrella companies, quite a lot of them offer employee benefits. One of the things that we offer is called Dragon Perks, where we've teamed up with 4,000 different businesses to give the contractors discounts. So, for example, they'll get 10% off at Asda, and that includes their fuel. They'll get 10% off at Nike. They get discounts at restaurants and bars whenever we can go out and about. They get free virtual gym sessions, free credit ratings, free eye tests. So it's just something to add value to the contractors. And if you use these benefits and you use these discounts, this can be used to pay your weekly fee or your weekly margin that it costs for you to work through an umbrella company. And on average, a contractor, if they're using these discounts, they would save themselves around £150 a month. So an average umbrella rate is probably around about £20 a week. So if you're using your employee benefits through your umbrella company, then that can pay your weekly fee. It can help cover your weekly fee and a bit extra. So this is us, we're jumping right into this is the sort of the nitty gritty here. So I go into these IT contractor forums, and I hear a lot of noise around umbrella companies that we keep the holiday pay, we keep the employment benefits, we keep all this different money. The only way that an umbrella company makes money is through the weekly fee and the weekly margin that the contractor gives us. So this example here, quite often I get agencies phoning me up asking me to work out an umbrella rate. So this is just to give you an example of how you make up an umbrella rate, and just to tell you all the breakdown and all the different parts of it. So we're basing this on a base rate of £350. So the £350, you would probably call that the agency PAYE rate. So if we were talking about the two different payroll examples, you've got agency PAYE or umbrella. If you were agency PAYE, in this example here, your rate of pay would be £350, and the agency would have to keep aside your holiday pay. They would have to pay your employer's NI to HMRC, pay the apprentice levy, and pay your pension. Now, if we're looking at calculating an umbrella rate, the umbrella rate, I'm jumping ahead a bit here, but the umbrella rate becomes £448.72 per day. So the take-home pay for an umbrella contractor is based on £448.72, would be the exact same as an agency PAYE contractor on £350 per day. The only difference is that we ask the agency to add in the employment costs to the day rate or the hourly rate. And if the agency was paying you guys PAYE, then they keep that aside and they pay HMRC, or they keep that holiday pot. So just to go through the calculations here, the 350 base rate over 5 days is £1,750. We then add on, we work out the holiday pay, which is the £1,750 times 12.07%, Umbrella contractors are entitled to 28 days holiday a year, so that works out at 12.07%. The employer's NIC, there's an employer's NIC allowance of £169, so you take the 1750, the 211.23, which gives you the 1961 minus that, and times it by 13.8%. So that gives you this calculation here. We've then got apprentice levy that all employers have to pay. So that's the 1750 plus the holiday pay times 0.005. And then the pension is based on 0.03. But there's a limit. The auto enrolment pension is capped at 50,000 earnings. So it's a maximum of 25.25 per week that we can add on to the rate. So if we're looking at this in total, you've got your 211.23 holiday pay, your 247.33 employers NI, your £9.81 apprentice levy, and your 25.25 pension, which gives you this total, divide it by 5, and then this 98.72 is your employment costs. So that 98.72, we asked the agency to add that on to the contractor's rate to give the umbrella rate. Now, in the bad old days, what agencies would do is they wouldn't pass on that full 98.72 to the contractor. The £350 a day, the full uplift should be 448. They would maybe give the contractor £400 a day umbrella, and they would keep 48.72 as an extra margin. So that's the way it worked in the past. But now you've got key information documents, which Dave touched on earlier on, plus all accredited umbrella companies have to give you an illustration. So before you take a role, make sure you read this key information document and you're happy with the deductions that the agency are going to make. And also you're happy the deductions that your umbrella company you choose are going to make as well. So again, just to highlight that, just make sure you always get that key information document before you take a role, and make sure that you understand the costs and that everything is transparent. So hopefully that breaks that down for you. That's quite a lot of numbers there. So if you want at any stage after this for me to have a chat with you about it, then more than happy to do that. So as I said, we're not going to sugarcoat this. There's more take-home pay. If you're outside IR35, limited company, the take-home pay is more than it is umbrella. The difference on £280 a day is £253.36, on 320 a day, £314.12, 360 a day, £409.57. Now, something to just bear in mind there, just what I touched on earlier on, you don't have accountant's cost when you come through an umbrella company. You do have your weekly fee, your weekly margin, but it's not as much as an accountant. You don't have the cost of insurances, and also you can utilise the employee benefits part. So in our scenario, it's Dragon Perks. So I'm not saying that will make up the 253.36, but it'll eat into it, and it'll take that down slightly. So what are your options? So your options, if you're inside IR35, is to be paid through an umbrella company, ask for an increase in rate to cover employment costs. Now, as I said at the start, this means the agency either takes less margin, which is unlikely to happen. They're telling you at the start that the margins are getting squeezed, or the agency client has to pay more. So that 9 times out of 10, that is where your increased rate is going to come from. It's going to come from the end client. So I would always say have that conversation and ask for a rate. If you're going to have to go umbrella or agency PAYE, ask for a bigger rate than you would have at the moment through a limited company, because you've now got those employment costs that I talked about in the example before that. If you're paid agency PAYE, you'll be on a lesser rate than you would through an umbrella company, or you should be anyway, because the agency have to pay the employment costs. If the end client, which is happening 90% of the time, are not increasing the rate, then you've got a decision to make. You either accept that rate or you decide to take on another role. So you just have to be in control of all the facts at the start of the assignment have that key information document, understand all the discounts, everything that's going to be happening there, and then either accept the rate or decide to take another role. Some contractors are actually becoming permanent employees, so if that's an option, then it's up to you. But we're also finding more and more contractors are now looking at roles overseas. So as I said, as part of our business, we can payroll, employ and insure contractors, and one of the big markets for us is the US just now. So we're finding more and more contractors are looking to move to America to take on roles, and it's renewable energy and life science are the two big sectors over there. So we've got an agency in Newcastle who's placing wind farm engineers building wind farms across America. We've got an agency in Manchester that are placing scientists into Pfizer across America, and they don't actually have to have offices in America. We can payroll, employ and insure them in every state across America. So it might, and we're not only dealing with agencies, we're actually finding contractors contacting us and asking us about roles that are in Poland, Canada, America, Dubai. So we can help with that as well. If you're deciding you've had enough of the UK tax system and you want to move overseas, then we're more than happy to help with that. So in summary, decide how you're going to be paid. Is it going to be PAYE? Is it going to be umbrella? Are you going to leave? Are you going to be permanent? Decide what you're going to do. Agree your rate. Understand your rate from the start and understand all the deductions, and now understand the employment costs and choose a compliant umbrella. If you are going to choose an umbrella, choose either a professional passport or an FCSA accredited umbrella, because those are the two industry bodies in the umbrella industry. And if anyone's interested in joining Azure, then we're doing a 2 weeks free and just quote BCS webinar. And again, just to finally touch on this, I'm helping a lot of agencies, but also clients and contractors around this IR35 minefield. So if any of you want to have a chat about it, my contact details are there, and again, more than happy to help. Thank you.
Thank you very much, Chris. And if I could ask our panelists to unmute themselves, and I could just say a very big thank you to you all, for your patience. We have overrun rather. We're now at 20 to 8. So I think Iraj, if you can unmute as well. Iraj has been looking at the questions. Can we just take a couple?
Yes, so we've got a question to Marie here. If you're inside IR35 and tax and NI is already deducted, are you still subject to corporation tax with the money paid into your company bank account?
It's quite an easy answer. You won't get double taxed. So your company is still subject to corporation tax, but you can offset the tax that you've already paid against it. So there's no double tax in there.
Any other thoughts on that one, Dave or Chris? Anything on that?
Yeah, well, what we're seeing is that the deemed model, paying a personal service company on an inside basis, the whole thing's a bit of a mess, frankly. We're not sure why anyone would do it. And after the Uber judgment recently, I think clients would be in a risky position whereby that particular contractor, having been told they're inside IR35, giving a status determination statement with all the pointers to being an employee, I think they've got a very strong case to just claim that they're a worker and claim all of the rights associated with that anyway. I just think it's a risky position. I don't think we'll be seeing many firms engaging on that basis.
I think the only place where it would do is if you've got outside the scope of IR35 contracts, which I'll be surprised if you do have a mixture, because you're probably doing the same role for one client as you would with another anyway. So
Yeah.
I think it'll be very unlikely that you'll be in that position. Yeah, I agree.
Mm.
Yeah, I think from a practical point of view, I don't know many agencies that can do the deemed calculations. It's a very complicated calculation, and a lot of them don't have the payroll software to do that. So I don't know anybody in the marketplace that's actually doing that.
That's why they get an accountant, Chris.
It's the disparities, and you've got to do a VAT. You have to have your calculations in your VAT system, and then have something else in the payroll system, and you have to have a status, the new status in your payroll system of deemed employee. it's all a bit messy. Firms aren't really that keen.
Iraj, do you have another one for us?
I have a couple of questions of my own, actually, which I think should be quite challenging.
Take
So,
advantage of the opportunity. Yeah.
yeah, so from the point of view of the new Chapter 10, if your client is asking you to do the work actually on site here in the UK, but you're actually contracting with their procurement company, which is based outside the UK, does that still fall within Chapter 10?
Dave Chaplin, you want to take that one?
Oh, not really. Marie, you did a bit on the overseas.
Yeah.
I hate the overseas ones.
I'm up here for you, Chris. So, so sorry, you're saying there's a UK client and a procurement that's overseas, and then a UK-based contractor. Is that what we're saying?
Well, actually, the UK-based contractor and the site of the project is in the UK, but the actual contract is with the offshore procurement company, which sits in another European country, where there is a double taxation treaty with the UK.
Okay, so I would say it sounds to me like if they're working in the UK, then the client they're working for must have a UK presence, therefore subject to the off payroll rules and have to do a status determination test. And because the contractor is a UK based contractor as well, they're subject to UK tax. So what happens is you've almost got to over the client that's receiving the services is almost got to sort of jump over the procurement agency that's engaging with them to pass down the status determination statement.
Okay, and another question around statement of work-based contracts. So where you've got contracts that are based on deliverables, you mentioned earlier the concept of risk, who bears the risk on a contract. Is that sufficient to keep somebody outside of IR35?
I can take that one from a status perspective. If you're arguing in a tax tribunal and you want to argue financial risk, you probably need something in the region of about £25,000 worth of financial risk that you would incur if the contract just didn't work out and went wrong, or it might be equipment that you bought up front. For example, if you're a surgeon, your insurance might be £20,000. It's that kind of level of risk that you'll need to be subject to.
Yeah, but typically if you're doing an IT project, they notoriously run over their initial length, and sometimes you have a lot of technical issues that prevent you from delivering them on time. If you did the contract as a fixed fee, regardless of how long it took you to do that contract, so let's say the initial term was 6 months, but actually because there were some technical issues with the project, it actually ended up taking, say, 8 months to deliver the project without any additional fee being paid for that.
Yeah.
Is that sufficient risk?
I don't think that would necessarily get you over the line for outside IR35 because of financial risk, but there's other factors at play there that would, particularly around the control aspects. So you're not playing an ace card with a financial risk, but because it's fixed price and I mean, the factors around mutuality of obligation aren't quite there. You'll probably be allowed to do the work when you want. There's all sorts of other factors that would make you outside. That would, I don't think itself you'd necessarily need to play that card. That comes in at the third stage of the status test, which is based on ready-mix concrete framework. Financial risk does, and that's a negation. If you after the first 2 stages you've come to the conclusion that someone is actually an employee, the third stage involves financial risk, where you can say, well, actually, I may have come to the wrong conclusion, and that's when that card effectively gets played. It's not up front, but I don't think you'd get to that stage, because I think based on financial risk, you're doing fixed price work, there's a scope of deliverables. I think that itself would make you outside.
Okay. We do have 2 other questions from other attendees on the call. So we've got one question that says, are there any figures on how much VAT and corporation tax will be lost by the change to off payroll?
No one knows this.
Very generic, isn't it?
Yeah. We just don't know.
Yeah.
No.
Okay,
No.
and another question to Chris. So Chris, you chose professional passport for your accreditation. Why not FCSA? Contractor spoke to today says his recruitment company is saying he has to choose someone FCSA accredited and never mentioned professional passport.
Yeah, the reason we chose professional passport over FCSA was that professional passport actually backs the accreditation up with an insurance policy when FCSA doesn't. There was also another reason is it was quicker to actually get through the audit than it was the FCSA. It took us 6 months and it was a very, very intense audit process, but FCSA usually takes 12 to 18 months. So we are going to go for FCSA, so there isn't anything anything against the FCSA. It's just that professional passport was the one that took 6 months, and we think we can go for that first. We are finding quite a lot of clients, in particular banks, are asking for FCSA accredited umbrella companies. And that isn't anything to do with FCSA being more compliant with professional passport. It's just that FCSA have managed to do a good sales pitch to all the banks and all these end clients to make sure that that's the industry accreditation. But I think professional passport's slowly catching up FCSA, and now there's 2 industry leading bodies. So nothing against the FCSA, both are 2 fantastic bodies in the marketplace.
There are some areas of the professional passport accreditation tests that are more robust than FCSA, but I'm not going to go into details. It's around holiday pay. They're much better on holiday pay.
Now, very nearly 5 to 8. I think we really ought to be calling this a day. Can I just thank our presenters again on behalf of the BCS Central London and North London branch. I'm also the treasurer of BCS Embrace, which is a group put together to try and bring diversity in both gender and race to the IT industry. So I would encourage anybody listening to re-register your preferences to say that you wish to support BCS Embrace in the future. But for tonight, IR35, it's here. It's the 6th of April. You need to do something. Our panelists will look at your questions if it hasn't been asked tonight, and we will get an answer to you if we can, if we have your contact details. I do hope you've all enjoyed it. I hope you've all got benefit from it, and you will act on the advice. And can I just thank everyone again, and we look forward to seeing you at a future BCS event. Thank you very much indeed.